Hello guys, and welcome to today's price action analysis video. This is the price action analysis of the 20th of June 2022, and we will be analyzing Nifty first. Now today we saw that Nifty opened with a neutral candle. It was neither bullish nor bearish. Why do I say that? This is the 915 AM candle. I say that because it has a wick on the bottom. You can see this wick, and the body is not very large, and it has a wick on the top also. So that's why it's neither bullish nor bearish. It doesn't indicate any one scenario at that point. So within that 5-minute session, we don't really know who is stronger. Are the buyers strong or are the sellers are strong? And so we could see that there was a very narrow CPR, and exactly around that CPR we can see this type of price action. Now if you check it out on the 15-minute time frame, this particular price action shows us that there were back-to-back two big red candles, right? Can you see this candle here? The 9:15 AM and the 9:30 AM candle are back-to-back strong red candles. And so you can see how the CPR was broken by those two candles, and the CPR really doesn't matter much when it is a single line. So it's a negligible CPR today. And given the fact that there were strong 15-minute red candles, two red candles, it means that that high was a mini supply zone. So in such circumstances, what we should do is we should go ahead and mark the high of that particular day open. So we will just mark it in red, and you can see now how the price, when it came down, it bounced from just above the previous day low, and after it bounced, it kept going sideways for a long time, and then it went and hit the red line here. Now technically this red candle, this green candle did break out of that particular red candle high, the first red candle high, that is based on the closing of that green candle. But you can see how it made this doji, two dojis there, and then a red candle there immediately after that. So here what had happened was this green candle had given a kind of a false breakout technically, but you cannot call it a breakout because that candle, although it had closed outside that high of the red candle, it was not a very strong candle that had given a strong closing. You can see that there is a small wick on the top, and yet it had closed outside, but there was no proper closing outside. So with the margin of around 10 or 15 points, that is a proper closing above that level. But here you could see that the high of the red candle was 15363.10, and the closing of this is 15366.05. so you can see that it is closed barely by about 3 points above that particular high. And then you can see how it made dojis, and this particular candle reversed back into the zone there. So no particular entry point today because the market was pretty much sideways today. We had said about it in this particular day that this looks like to be a strong support, but I had told you not to mark it as a very strong demand zone because there was no bounce coming from that level. And you can see here that there is a bounce coming from just above that level. From the low of this particular candle to the bounce, it is around 170 points, which is quite a bit. But is it tradable? It's questionable because since this particular candle, the doji here had formed, the price had bounced from here on the 17th, from here to this particular high. So that was more than about 200 points. And so the price had bounced from there, yes, with big green candles, these. But given the previous day's price action, we don't really see any particular demand zone on this day, on the 17th. So there is no particular demand zone there for the 20th of June, that is today also. So if you're a pure supply demand trader, even then you don't see any particular reversal candlestick at this point, okay? And the CPR is very narrow. Since it's a single line, I just said that it is inconsequential. You can see how price does not respect the CPR at all when it's narrow. See, it was broken here, then price kept going along the CPR here, then it went up, then it came down, then again it kept going along the CPR, breaking it to the upside and to the downside multiple times today, and then it bounced up again. Then this particular candle here, I'm talking about this candle, kind of gave a closing above that red line, but now the new resistance level was formed at this particular line here, which is the PDH, and so price action has not really been able to break this particular candle's high. So this day's high is a strong resistance now because it has not been broken for the entire day. So instead, what do? We go ahead and mark this candle's high as the strong resistance here for us. Okay, it will be a resistance. It does not necessitate a particular supply zone. Now you can see around that level itself, price has taken support multiple times. See this on the previous day, that is the previous session, I mean on the 17th of June also. See how price had fallen from here and then it had taken resistance. During this day itself, I had said that these two ranges are very important for price. One of them has to be broken for us to see a big movement to the upside. I had said that in that video. We will be extending this Virgin CPR, which is just a session old. And what levels do we see here? Do we see any more important levels here? We have seen a bounce today coming from the previous day low, that is today's low, but that bounce is inconsequential presently because that level will be retested, and I feel that level will be broken the next time it is retested. Now we will have to see how price reacts to it when price comes to it the next time. For 2 consecutive days price had, or 2 consecutive sessions I should say, price has gone sideways now. And you can see tomorrow that the CPR is kind of average. How many points is it? It's around 45 points. So it's an average CPR and not very narrow, but not wide at all. So we'll keep all these levels going. The levels on the bottom, they should keep going as a demand zone. It's a historical demand zone. These levels are old, nothing new, but price has been bouncing around that level itself. So that level does show us that it is holding as a support. So let's see on the daily time frame what sort of price action do we see. Now see on the daily time frame we are seeing certain dojis here, and even in today's price action we don't see a very strong bullish candlestick. We do see this candlestick with a large wick on the bottom, but it has a small wick on the top also, so not a very strong green candle, and it is still taking resistance at the close of this particular huge red candle. Okay, so presently Nifty is under a lot of pressure. If you were to ask me about technical analysis here on the daily chart, then Nifty is under a lot of pressure and there are supports below it, but only time will tell us if those supports hold or not. And I think this is all for the price action analysis in Nifty. Now we will head over to Bank Nifty to see what sort of day it was in Bank Nifty. So in Bank Nifty we can see that it has been another sideways day just like in Nifty, and Bank Nifty has also been going around the same place for 2 consecutive sessions now. Now you can see here how Bank Nifty has been going in a particular range. It was the same scenario in the previous session, but at least in the previous session we had a very wide CPR. In today's situation or in today's session we had a pretty narrow CPR in both Nifty, Bank Nifty, and yet the day has not, or the price has not gone anywhere. This is where price opened and this is where price closed. So not a big difference between the open and the close. And you can see how price has taken support just above the S1 pivot, and after this initial fall we don't see any particular trend in the market at all. And was this CPR breakout tradable here? No, it was definitely not tradable. There is a thing that I have always said in all my videos, that there has to be some sort of consolidation before a breakout if you are a breakout trader. So if you are a breakout trader, don't just jump into the trade. Just ensure that you are taking your time there to see if there is any sort of consolidation before that particular breakout. So if this had given us a consolidation like this, something like this, and then price would have broken out like this, then at least we would have said that there was some chance of that breakout sustaining. But this particular breakout that we saw today was not really a sustainable breakout. breakout should always be taken after a period of consolidation and then a breakout comes out, or it could be a breakdown or a breakout, it doesn't matter what. So that is why the breakout did not sustain here in this candle. Price took support and it bounced off again, and then it kept going sideways the entire day. It did not even retest the high of this day today. Okay, here was the previous day high, and the day high was almost at the same level. So price tended to stay just around the CPR today. Neither the S1 was touched, nor the PDL, nor the R1. So price just was locked between that one particular tight range, which shows us that there might be an explosion coming here, and most probably that explosion will be to the downside. Let's check on the 15-minute time frame. What do we see here? We don't have any particular important levels to mark at this point. PDH and PDL should anyway be marked, but if you are particularly trading on demand and supply, then we don't have any demand supply zones in this particular days to mark. So we don't have any important levels coming from the previous two sessions in Bank Nifty. Price has just been going in a particular tight range. And for tomorrow, we can see that there is a very narrow CPR. You can see how this CPR is so tight in this particular zone here. This happens when price has gone in a very tight range the entire session. Okay, so we will see tomorrow how price action is, and be careful trading. If you see that any particular important level is being retested below this level, that is the level of around 32,150, and another important support coming in at around 31,900, then just be careful trading around those areas, because those areas might provide support to price and price might bounce. Intraday you cannot really judge by the general market scenario or the overall market scenario. Yes, you need to keep in mind the overall trend of the market, but while trading intraday, there might be fluctuations, there might be a lot of volatility, and there can be seen important levels at which bounces could be there. So don't just keep thinking that it's a bear territory, so I can keep buying puts in every session and the market will reward me. It's not so. Intraday you need to be very careful with levels, and so only support resistances are your friends. So don't think that support resistances are useless and it doesn't work, and don't rely on indicators. This I'm telling to the newcomers to this channel. So don't rely on those indicators, throw away all those indicators, focus on support resistance, focus on daily pivots, weekly pivots, central pivot range, and learn price action. That is the way to open your path to profitable trading. Alright guys, so I think this will be all for the price action analysis of Nifty and Bank Nifty. If you've liked this video, please hit the like button, subscribe to the channel, and hit the bell icon so you're notified each time I post a new video. Bye bye.